YouTube? It's your boy, Young Equity Chris.
And it's your boy, Young Equity Devin. Let's get it.
All right, today we're going to be talking about FOMO and why we think it's bad for investors. So, to kind of frame it for you, FOMO is when basically you have the fear of missing out. You go open up Robinhood or you chat with your friends with stocks and basically hear about some stock that ran up 100% in a day. And now you're having FOMO. You're like, man, I should have been in that play. I should have been in this play. No. FOMO can destroy you as an investor because what's going to happen is you might end up selling out of some of your other stable plays to get all this cash and put it into a play that's been running, and then, you'll get Tilrayed. But the stock will run up and run all the way back down with all your money in it, and you've lost all this money, and then the stock you sold out of actually makes a run, and so you've lost double the money. So no, FOMO is not good for investors.
Yeah, I mean, the easiest example would be GameStop or AMC, right?
Yeah.
There's a lot of FOMO around that. Oh, man, what is Wall Street bets? First of all, you kind of have to be in the loop before you can start even thinking about investing in these FOMO stocks, right?
Yep.
If you're not in the loop, you're going to miss the wave. So you might as well keep doing what you've been doing. Stick to your investment principles, right? So the whole GameStop craze, I won't go into too much detail, but, when it went up 100% and went up another 100%, and then it went up again, it's like, hey, man, at that point, you're like, oh, man, I want to try to cash in on some of this action, right? Just leave it alone. That's the only advice that I can give anybody that's involved in a FOMO stock.
I mean, this is like how I like to think about it, right? So, we have the stock term, don't try to catch a falling knife.
Right.
Well, there's some people who try to catch a flying rocket.
That's true. That's crazy.
And you never know when that rocket's going to, run out of gas. This rockets go up and they come back down.
Right.
And you don't want to catch it at its peak height.
Yeah, I mean, there was another stock, Tesla. Everybody knows Tesla, right? Elon Musk. He's the GOAT, right?
Yeah.
So after the split, I was kind of, I don't know if I want to get involved with Tesla. I feel like it's kind of it's overvalued. It's overpriced right now. It was sitting around $525, $550 around that price. And, it's a very expensive stock. And also at the time, they didn't have a lot of sales. And, it was just a bunch of FOMO and speculation around it. The company hasn't been around that long. I mean, it's a great product. Chris owns the car. So I was like, let me give it a chance.
And the stock.
Exactly. I'm like, let me give it a chance because of FOMO. Right? I'm hearing all these good things about it. It's literally running like crazy, 100% gains. And I had missed the wave. But really, I didn't miss it. I didn't miss it. Look at the stock now. It's still performing.
Yes, it's higher than it was at the time you bought it.
Yeah. Exactly.
So, I mean, here's the thing, right? With FOMO. Then you're becoming an emotional investor, right? And that's not a slug. I've done it. He's done it. There's some plays. I remember I sold some ETFs to get out of a play, to go throw on a FOMO play, and I just got crushed. Xpev. To this day, I hate that stock because I've bought it like at $60-something a share. It's never even touched 60 again, I believe. So, I mean, it is what it is. It is what it is. We get caught in FOMO. And I'm just saying, as an investor, just take your emotions out of it. Right. Stick to your principles, whatever they may be, and invest according to that. Because making these 10% incremental gains is better than chasing 100% gains and then taking that L. So, moral of my story is this. If you're just hearing about the run-up, it's already too late. You need to hope your fundamentals lead you to a stock before the run-up.
That's a very good point. And just think about it like this, man. There's nothing that's going to teach you more than experience. So if you haven't, invested in a FOMO stock, you're not going to really understand what we're feeling right now, right?
Yep.
You're not going to understand what we mean by going back to the principles. Because once you've tried to get involved with something like a GameStop, AMC, or Tesla at the time, you're not going to know. So I'm not saying don't try it. I'm not going to say, it doesn't work out. It works out for the people that know what they're doing. So before you get involved, do your research, know what's going on, and also remember the principles in the back of your head for when that stuff does not work out for you.
Yes, sir. So moral of the story is no FOMO stocks because that'll lead to bag holding, and bag holding sucks.
No paper handy.
Thank you guys for checking us out. It's your boy, Young Equity Chris.
And it's your boy, Young Equity Devin. Let's get it.
Yes, sir.